It's Friday Coffee with your mortgage man, Eric. And here we go. Woo! Today we're going to get caught up. Was out of town last weekend, so we're going to get caught up on the latest buzz in the mortgage industry in regards to what's going on with the pandemic, right, that we're in, and how the mortgage industry has suffered from it. Some of the hot buttons, if you will, is the Forbearance program as a result of the CARES Act, the stimulus package, and what's going on with FHFA, Fannie Mae, Freddie Mac, and Mark Calabria. Some of the latest buzz with those hot buttons, if you will. So let's jump right into it. So the forbearance, there's been some relief, if you will, when these consumers are going to go back into their repayment structure. We are hoping that the servicers that are tied to it are going to allow them to maybe get into a deferment program, or rather than just having to pay all one lump sum back, right? A deferment program or a partial payment program. So we're hoping that that's going to be the case, because having to repay 4 months, 6 months, 12 months of payments when the forbearance is over, we know that that's going to be a disaster. So the rumor mill and an announcement from FHFA. Look, FHFA, Mark Calabria is not the end all. It's up to the loan servicers really on what they will allow as far as deferment or forbearance, or what type of a repayment structure that is going to look like for the consumers once they come out of forbearance. Now, here's some of the biggest news that took place last week, and it's interesting to say the least. So prior to the news last week from FHFA, Mark Calabria. Now this is good news. This is one of the better things that he has announced. Prior to this announcement, if you were in forbearance, if you let your loan go into forbearance and you missed a payment, with just one payment, you would have to make 12 months of payments before you were going to be eligible for a refinance or to be able to buy another property. So that's ludicrous, right? Like, oh my goodness, how many homeowners would have guessed that forbearance, missing a payment or 4 payments or whatever, was going to cost them that much, right? That's insane. You have to wait a minute. You're telling me that I can miss my payments and that it's not counted late, as the CARE Act says. It's a performing loan. But Fannie Mae, Freddie Mac, your guidelines are going to tell us that we cannot get pre-approved or approved for a refinance or to purchase another home until we're out of forbearance and making payments for 12 months. So the release, the good news, if you want to say that's good news, is that now you only have to make 3 payments. You got to come out of forbearance, no protection of the forbearance, and you've got to be back making 3 months of payments. Then you can be eligible for a refinance or to buy another home. So is that good news? Is it bad? Look, it's better than 12 months, right? But I think that wasn't the intentions when Congress wrote this bill, the CARES Act. It's supposed to be deemed as a performing mortgage, so not a late mortgage. You're not getting dinged for a late pay, right? So this could change. This is fluid. This whole thing is fluid. This whole, the whole pandemic thing is fluid. My goodness gracious. Look, hopefully this changes and we get back to something that's common sense. My opinion would be, look, you come out of forbearance, you make your payment, you should be eligible, or immediately eligible for a refinance or a purchase. I mean, you put it in the bill that this is a performing loan, that this is not counted as a late payment. This is, a freebie, if you will. Now check this out. These are some cool stats from a survey that was done. Survey by LendingTree. I'm sure you're familiar with LendingTree. You've heard about LendingTree. So they surveyed, I think it was 1,000 homeowners that went in and utilized the forbearance program. So interesting stats here. Out of those 1,000 homeowners that were surveyed, 5% actually said they absolutely needed it, there's no way that they were going to be able to make their mortgage payment. That's it. 5%. That's it. Out of 1,000. 5% said thank goodness. There was no way we were going to be able to make our mortgage payment. Another 26% said they could have shuffled some things around. They could have missed some other bills and in concessions, but still made the mortgage payment. So roughly 70% of people that went into forbearance could have absolutely continued making their mortgage payments and other bills. They simply wanted to not make their mortgage payment. They wanted a relief to not have to make a mortgage payment. So keep that, isn't that interesting, right? What we've done. Now, as a result of that, so most people missed that the month of April's mortgage payment. That has now resulted in 1.6 million people as not making a mortgage payment, delinquent. Even though the CARES Act, it's not delinquent, you have to remember the shareholders, the bondholders on the market, that's a delinquency. That they're not receiving their monies, right? They're not receiving their returns. 1.6 million people, which is the highest ever. Even in the Great Recession of 08-09 with the housing bust that we had right back then, even back then, 1.6 million people, record-setting, have missed their April payment. Now, just think about that. The consequences that we're going to have just with that, and how long will this last, right? What's going to happen for the month of May, June, et cetera, et cetera. But 1.6 million, we set a record. Great. That's not a record we want to be setting, but there we are. There's some interesting news. So now, on to Mr. Wonderful Mark Calabria of the FHFA, Director of Fannie Mae, Freddie Mac. Now, we've seen some tensions loosen a little bit. We've seen some, the atmosphere get a little bit more positive as far as the servicers and the bondholders, the aggregators, right, the investors that are purchasing these mortgage-backed securities, that are giving out these warehouse lines, et cetera, et cetera. We've seen that atmosphere relax a bit. It is much better today, May 22nd, than it was March 22nd, I'll tell you that. But not out of the woods yet, and just to kind of recap, FHA, HUD's been easy to deal with in regards to the forbearance programs, and as I mentioned in previous videos, just because you don't make the mortgage payment during the forbearance program doesn't mean it stops there, right? The servicer has to make that mortgage payment in your behalf to the bondholders. You buy a bond, you're going to be getting your dividends each and every month. So somebody's got to make that payment in your behalf. So FHA HUD stepped up to the plate and they've given out some of the stimulus money to cover that for the investors. Otherwise, the investors were going to go under. I mean, the mortgage market was that close to collapsing, and most people have no idea about that. But that's the truth. So HUD, FHA stepped up to the plate. Fannie Mae, Freddie Mac didn't. Now, they did come out and say once it reaches the fourth payment, then they'll take over. They missed 4 payments. Then they'll take it on, and there'll be some relief from there. Like, really, that's not a lot of relief, if you will. So in the last couple of months, what the investors had to do is inject more margin to be able to sustain the losses that they know are coming. They're coming. The longer these consumers miss their mortgage payments, the longer they have to make the payments for them. And that's just not a business model that's set up to last very long at all. So they've taken some precautions and added some margins, if you will, so that they are much more prepared for what is going to take place today than they were 2 months ago. Now, would it still be nice if FHFA would step up to the plate and truly help these investors? Absolutely. It would make it. You would see interest rates drop immediately, because I think we all know interest rates should be a little bit lower than where they're at right now, but they're not because of the issue that we're having with FHFA. I mean, when your FHA rates are way lower than conventional rates, that should tell you something, right? For higher credit scores, that is, anyhow. That's a whole nother topic for discussion if you've got below 680 credit scores and you're trying to get FHA, VA. Not enough time to get into that today, so let's keep on track. Mark Calabria. So if you saw the market yesterday, what was it? I think it was Thursday the 21st. Maybe it was Wednesday the 20th. Not sure, but you saw the stocks on Fannie Mae and Freddie Mac go up 17 and 21%. And that is because Mark Calabria's main focus here is to get Fannie Mae, Freddie Mac out of conservatorship. And look, the entire mortgage industry would love for that to happen. And I've announced this, I've said this before in previous videos. We'd love for that to happen. We've wanted that for it to happen for years, instead of the Treasury just sweeping all of their profits. That's insane. But right now, in the time of this pandemic, so he's tightening up. He doesn't want to help out and dip into his reserves to help mitigate the situation with the industry, the mortgage industry, almost collapsing. He was not budging. And he believed that forbearances were not going to exceed 8%, which he's already been wrong on that measure. So Mark Calabria has been focused on that and continues to focus on that. So there was some announcements made, again, Wednesday, Thursday this week, more positive news in the aspect of Fannie, Freddie coming to market, being traded in the public market and not quasi-owned by the government any longer. So stocks shot up in anticipation of that. So that's an indication that train is moving forward, regardless of this pandemic. And it's like, man, really we had to get this going now. Like, we could not help out the servicers who are in desperate need. I mean, I'm telling you, they were in the brink of collapse. If it wasn't for FHA and HUD, the majority of them probably would have collapsed. Now look, we're through some of those really tumultuous times, and there's some easement on that part of the industry. But like I said, we're not out of the woods yet, because they haven't had to make those payments for 2, 3, 4, 5, 6 months yet, right? I mean, they've only missed the April payment. So think about that. The longer they miss the payments, the longer those mortgage servicers have to make the payments for them. That's not what they were designed to do. That's not the business model. Keep that in mind. So hopefully, there's your update. It's Friday Coffee with your mortgage man, Eric. 602-757-2171. We'll see you.